Welcome, everyone. Have you ever wondered how some startup ideas just take off and some ideas just don't? Well, the process of going from an idea to product market fit is sometimes described as the dark arts. And this show, the pre-seed show, is what we're going to use to demystify the dark art. I'm Anamitra. I'm going to talk to Kashish, co-founder and co-CEO of Hightouch. For the record, we were fortunate enough to invest in Kashish's original round, the pre-seed round. And since then, the company has gone on to raise over $50 million from preeminent VCs like Amplify, Iconic, and Bain. But did you know when they first started, the idea was a travel tech startup? And the company went through 8 different sort of iterations before landing on what the company is today, a very successful Saas business. Well, if you have questions, so do I. So let's get into it with Kashish. Kashish, welcome to the show.
Hey, Anamitra, thanks for having me.
My pleasure. Before you were a successful founder, before everything is the way it is, did you always know that you wanted to be a founder? Tell us your story of how you got all of this started.
Before we begin, just to say the word successful founder gives me a ton of anxiety. I guarantee you, every Series B, Series C founder you talk to will say they're not successful. So if there's other folks out there that are thinking, oh shit, when am I going to become successful? Just like hold on to your seats because it takes a while. And definitely don't feel like that's the case for us yet. But I wanted to know, I felt this way since high school. In fact, I moved to the US when I was 5 years old, and my dad and all of his brothers have always had what they kind of think is business DNA. They worked on jute bags. They would stitch the bags together that rice goes into. Then my dad ran a gas station. And in high school, I was introduced to the concept of entrepreneurship. Through one of my best friends, he introduced me to an organization full of entrepreneurs in Atlanta, where I grew up. And that's where I worked on my first business plan in 10th grade. I was always interested in technology. I was always an engineer, but I never knew about business. And so ever since then, I've always been much more inclined to kind of start my own thing, be an entrepreneur, and help the best and most interesting technologies see light of day.
That's terrific. That's terrific. I mean, what a wonderful journey. You've now and before you started Hightouch, you also worked in venture, and prior to that, you worked at a number of other sort of functions and jobs. What was the common pattern? What experiences were you trying to pick up? What were you aiming towards during that process?
Yeah, ever since even before college, every single thing I did, I thought hey, one, I don't want to get pigeonholed. So I don't want to get pigeonholed into being a developer or being a finance person or being any one thing. And two, I want to set myself up to have all the skills necessary to become an entrepreneur. And jokes on me, there's no such thing as having all the skills. You have to learn them on the job. That's just how it goes. And that's, by the way, one of the things I tell every single person that asks me, am I ready to be a founder or should I wait until I have X, Y, or Z? My answer is always, you're ready the day that you say you're ready, because you'll learn the rest of the skills in the job. But for me, ever since before college, I always optimized for what can I learn to get the patterns necessary to understand what the best startups have. And so whether that was working at startups, working on the venture side to see even larger amounts of patterns for good startups, I was always thinking about not being pigeonholed into a specific space or a specific type of technology, but just seeing the patterns as a whole. And as a result, I feel now I've kind of seen the different patterns that B2B and B2C companies follow, or fintech follows, or healthcare follows. And I've really been able to focus in on what I think the best businesses are. And as we built Hightouch, we had a lot of those principles in mind. We were thinking about is this PLG? Are we going to be able to carve out a category for ourselves? How many sales calories are going to go into this versus customers selling themselves? And we were asking all those questions even before we knew that we had product market fit. And to your point, I guess one thing I'll add is I worked at Bessemer Venture Partners. I was actually only an intern there, but during the 3 months I worked there, I attended over 12 partner meetings. And I saw pitches for amazing companies like Carta and Bread and other just incredible companies. And so I saw the patterns and the questions that VCs ask early on, even before I knew what it was like to be a founder.
That's great. And you weren't intrigued enough to continue as a VC. You'd be good at it.
Well, I mean, I'll tell you the honest answer, which is I really wanted to live in San Francisco. I had this very unbearable intuition that I belonged in San Francisco and that going to San Francisco would change my life. And so I deferred my offer to work there. I told them, hey, like, I really need to be in San Francisco for at least a year before I move to New York. And I think that was totally right. Moving to San Francisco changed my life.
Right, right. Many, by the way, just on a side topic, many founders are asking that question. At least they did during COVID. Should they locate to San Francisco or not? Seems like many are relocating back. Where do you stand on that today in 2023?
I would say two things. It's no longer necessary. In the past, if you weren't in San Francisco, you'd be screwed as a founder. There's no chance of being able to raise the same valuations, etc. The barrier to entry is much lower. You can live anywhere in the world and still succeed. So the downside case is lower for being outside of San Francisco. But I think the upside case for being in San Francisco is just as high. Being here, the chances that you'll be able to raise, that you'll be able to meet your co-founders, that you'll be able to hire, all three are higher than not being here. So like, I'll just, my dad has a principle, which is there's no such thing as luck. Luck is a combination of right place and right time, but you cannot control for time. Like time is totally out of your hands. What you can do is control for being in the right place. And he doesn't mean like location. He means working with the right people, knowing the right people. He means like reading the right books, basically creating your own luck by being in the right place, knowing the right people, working on the right things. So that way, when the right time comes, you're totally ready to go. And I think SF is one of those things. Same goes for like having other friends that are entrepreneurs. If you are the only person in your friend circle that is starting a business, it's going to be tough.
Right.
And changing that friend circle, adding people in that friend circle that are also entrepreneurs makes a massive difference.
That's right. Putting yourself in positions to be lucky, not just relying on luck itself.
That's
Um,
I love
makes a
I
lot of
love how you put that.
Yeah, makes a lot of sense. Makes a lot of sense. And then you put yourself in positions to get lucky to find your two co-founders. How did that come about? And there is a little secret. The mission local mission control is
Mission
where
control.
some of this magic started. Tell us a little bit more
Yeah.
about that.
So when I first moved to San Francisco, I was couch surfing. And many years ago, I had visited this house in the Mission in San Francisco called Mission Control. And it was a 10-bedroom house. The people in there were from all different walks of life. Some of them were founders, some of them were not. But it was like the social central of San Francisco, in my opinion, around like 2014, 2015. And I was super lucky that like when I landed in SF, they posted about an opening that, hey, we have a room open in Mission Control. And at the time they were taking interviews, you have to interview to live at this house. And I thought to myself, like, this is the best possible way for me to meet the greatest number of people when I first moved to San Francisco. And so I was fortunate enough to be able to move in September 2018. And through that house is where I met my co-founder, Josh. And 2 months later, my other co-founder, Tejas, moved in. So it's not that we worked together immediately after living together, but we became friends, super close, basically like brothers. And eventually in May of 2019, I convinced Tejas to join. And then sometime in 2020, I think around like April or May, we convinced Josh to join. So it doesn't happen overnight, right? It's not like you set a plan. I'm going to start a business. I'm going to find a co-founder. I'm going to do it this way. Could never have known that this would happen. But right place, right time. I put myself in mission control, met tons of people. Eventually, Tejas was able to join at the time Carry Travel in May of 2019. And then a year later, we brought Josh on after he was working on his own startup, and we decided to merge the two together. So no one could have predicted that we'd have a 3-person co-founding team and that we'd be where we are today. And I think that's like another lesson to take away, which is founders that get caught up tracking out what the path to success is going to be, they'll never figure it out. And actually, Anamitra, you taught me this. I don't even know if you remember this, but in 2019, you taught me this, which was that if early stage founders have a plan for the next 6 months, they're good to go. If you're planning stuff past 6 months, you're probably wrong. Doesn't mean much. But if you have a really
Yeah.
strong plan for how to optimize every 6 months and stack those, then that's enough for pre-seed stage. And I learned a lot from that because I was never thinking like, shit, how are we going to do this 3 years from now? if we need to hire a big sales team. I was thinking about how do I get the next
That's right.
progress milestone in 6 months.
That's so true. That's true. In the long run, we're all dead, so it better work in the short run. And you
Yeah.
guys have done it exceptionally. Both Josh and Tejas, they came out of segment. Um, what was it about Tejas or about Josh that made you say, oh, this is my co-founder. This is the kind of person I want to be with.
Yeah. So I evaluated a lot of people to work with. I actually trialed working with several of them as well. And it was night and day between the others and Tejas. The criteria I used was very, very, like, I'll always remember it. It was, would I marry this person? And not in a literal sense, but it was in the sense of, would I trust this person to own 50% of my wealth, to have like an undying desire to win and to figure things out, and to have the caliber of like never giving up, etc. And so like sometimes in co-founders you choose to like fill your gaps, and sometimes you choose to kind of fill like you want to find someone with the same mental philosophy and vision as you. And I think I found both in Tejas. So on the gap side, I found that like, he'd be a perfect technical co-founder, and he had been an engineer for like over 5 or 6 years. And then on the philosophy side, I felt that he was the exact same as me, which was
Hmm,
like never giving up, always finding a way to succeed or win, and just being able to figure anything out. Like I think the thing that makes Tejas and I interesting, I'll just comment on him because I don't like talking about myself, is it doesn't quite matter if you've done the thing or not before. Um, there's a 100% belief that we can figure it out. And there's a
right.
belief that if someone in the world can figure it out, it's us. And I think that's like the really big key for like founder mentality. It's like, why not me?
Right.
What makes the other person incrementally better at figuring this out than me? And usually the answer is nothing. Usually it's that you can figure it out. And that's why we've tackled really hard problems with all of the businesses that we've tried to work on, because we're looking for
Right.
the big outcome, not just like I have some unique skill set in this and I'm going to figure this out that way.
It's quite insightful. That question that you just asked, why not me? Truly, why not me? Why this other person? I can do this too. Many people can do it, but sometimes they lack belief, they lack confidence, and maybe sometimes you get that from your co-founders. When you're down, they bring you up and they help you to, and they remind you that you have the ability, that why not you?
Yeah.
That's a terrific sort of thing to keep in mind.
A lot of people ask, how do you get through pivoting so many times? So as a whole, we worked on now like 6 business ideas. And people will ask us, how did you get through all those pivots? How did you maintain conviction in yourself and your founding team? And that's where you're totally right, that having co-founders means that there might be one day or one month where one has less conviction, but the other two will have conviction. And then it'll flip. Then
Right.
one will have more conviction, the other two will have less. But there's always someone who believes that we can make it. And most importantly, you have belief in the team. With any single co-founder, it's difficult because you might lose conviction in yourself. But when you're thinking about a group of 3, it's much harder to lose conviction in your co-founders and in the founding team as a whole. And I think especially during like 2020, that's really what carried us.
It's really difficult, right? Especially when like switching gears a little bit from co-founders to the ideas. When you're working on something and it may or may not be working, um, everyone starts with at the height of optimism, right? You start with a lot of hope and ambition, and why not me, etc. And then the pedal hits the metal, and sometimes it works and sometimes it doesn't. Sometimes the car comes to a screeching halt and you don't know why. When you guys were working on the travel idea, carry travel, and then COVID hit, that must have been a really tough time, right? Because the everything just evaporated, not just from a health wise, etc., but from a business and startup perspective, right? It's like, what do you do at that point?
Yeah, I mean, so maybe hindsight is 2020, right? Every rock in the road is actually an opportunity, and that's the positive way to look at it, which is
Mhm.
that sometimes things happen for a reason. For us, pivoting out of travel was a blessing in disguise. We had really big questions about the economics of our travel business, and we're already looking for other business ideas to work on. And COVID was a forcing function to go knees deep on those other business ideas over the travel idea. So that's the positive
Right.
side. The negative side, what you're referring to, is what I call like founder existentialism. Early stage founders wake up every single day asking themselves, am I going to work on this business idea today, or am I going to work on a different one? And that mental and emotional burden is very different from let me scale, let me scale, let me scale. Once you know that you want to scale an idea, it's super fun. You're like, all right, I'm going to hire, I'm going to spend money, I'm going to build product, I can scale this thing. And you feel like the incremental hour you spend is towards something big. Um, Before you get there, you're asking yourself, what if the incremental hour I spend I have to throw away because I'm going to work on a different business idea tomorrow? And so that's like the kind of existentialism that like really makes being an early stage founder hard. And I resonate with it because like Tejas and I used to talk about this all the time. Like until maybe 3 months after our Series A, we had that existential dread of, am I going to work on this business idea?
Right.
And around February 2021 is when we said, nope, this is it. Let's quadruple
Mm.
down on this thing. This is the one. But that was after we raised a $12 million Series A. And it's because we had a really high bar for like what we consider product market fit at that time.
So that's 2 years into founding the company that you felt that way, where you had that level of conviction. And up until that time, you were still, I guess, in validation mode. You're still trying to figure that out. You're still waking up to essentially think, is this the one? Is this the idea? Because as you said, like it's in one other way to think about it is when I had some of these ideas, it's almost when I feel like I have a roadmap in my head for the next week and the next month of really interesting things to do, and I can't wait to see them out. You kind of feel natural
Mm-hmm.
conviction versus if you can't think about like whatever you're thinking of building, you'll exhaust that roadmap in a week or so. So and it's not clicking. It's really hard, and that sort of and the hardship in that stage that founders such as yourself kind of went through is rarely revisited once everything is successful, because it's like a water under the bridge. It doesn't matter as much. But that's most founders don't come out of that process. The company either has to
Mm.
shut down, or the pivots don't work out, or the capital has to get returned, or there's an acquire, things like that. And you learn a lot from that process. You were the lucky few that came out on the other side. I wouldn't say lucky. You were the successful few that came out on the other side. Um, Take me back to that process. Take me back to that learnings. I'm feeling you have a determination. Perhaps that came out of that process. Also, you have a point of view on disvalidating ideas as a secret power, as a superpower almost in a way. Can you talk a little bit about some of the learnings you took away from that process?
Yeah, so there's a lot to share there. But I think the really key thing is you mentioned over 2 years validating different ideas. You're totally right. In the beginning, every founder thinks I have to validate my business idea. I should do customer discovery. I should make sure I'm selling to a buyer that has budget, sees value, etc. And very quickly, many founders start working on something that sort of works. And then they'll hire salespeople and build product for something that sort of works. But they're not asking themselves the question of like, is this the business that makes the most sense to work on for the next many years? Sure, this can work. Sure, I can sell the thing. But should I really be building a big business out of this, or should I work on something else? And that's why after the first couple pivots, we started changing our mental model to how can I disvalidate this idea as fast as possible? And this is a principle that YC shares with their founders as well, that I fully agree with. It's your job as a founder. Gustav mentioned this all the time at YC. Your job as a founder is to disvalidate your idea as fast as possible. So that way you can find the business idea you're going to work on for the next 10 years.
Hmm.
And you should be super grateful the moment you disvalidate your idea and you have conviction that you shouldn't work on it. Because you just saved yourself many months or years of time of working on the wrong business idea. And this is especially important to people that have the why not me mentality, that value themselves. Because we have like some number of good years of our lives where we can be super productive, right? Like maybe 20, 30, 40 years. We can't spend a ton of those years working on the wrong business, eventually shutting it down 3 years later. I'd much rather shut that business down in 3 weeks and start another one. The Brex founders did that, right? They started YC like a VR company, shut it down within weeks, started a credit card company. You want to fail the idea as fast as possible to get to the right one. And there's a bunch of learnings that we had on the journey to product market fit to learn how to disvalidate ideas faster. But the very first learning is like crave this validation. Like you should want the disvalidation. A lot of founders have this thing that we call happy ears. So our sales team, like we coined this term that we call happy ears, which is you want to hear the best possible positive feedback on your calls. And you want to take that back to your co-founder or your investors and say, here's the positive feedback I got. My customer's super excited. They want to pay me more. Turn off your happy ears, listen for the bad stuff, and figure out like problems in your business. Like the economics won't make sense even if I can sell the thing. Or I don't know how to make this inbound. And if I do outbound, it's going to be too slow. Like those kinds of questions, like ask yourself really early on when you're disvalidating. And that's more on the like business side. And then on the customer discovery side, I have some much more interesting questions to share as well.
That's terrific. It's disvalidating ideas is somewhat counterintuitive for most folks, because especially if you've been struggling to find a killer idea, moment you hear good feedback, I mean, it's natural for you to want to say double down, raise money, go, right? Before really figuring out if this is the big one, because you've been hunting for something like that. How do you what's the mental model for that? I mean, especially if you might be hearing something that's positive about the idea.
Yeah. So I'll start with how do you not lose hope in that process, right? Because if I frame it the way that we just talked about it, it sounds like you have to be a pessimist and continuously be pessimistic towards your idea, and that's not the case. So the way we think about it is you choose a space where you're very sure that there's like money to be made, value to be created, right? So and you solidify that space. Like this is the space I'm going to try to do discovery on for n number of months or weeks, and then you say I'm not tied to any specific solution in this problem space. So I am tied to the problem space. I will be very honed in on this problem space, but not tied to any solution. And that's what helps you disvalidate every single solution you think of, because you say, okay, well, should I actually work on a different solution in the same problem space that's going to grow quicker or have better economics or provide more value to my end customer? And I think that's like the exact thing that like a really good product person will tell you when it comes to discovery. Your customer is really good at describing their problem, but not describing their solution. The same way, founders can't be too indexed on their solution in the early days, but it is fair for them to be indexed on their problem, at least for a while, until they eventually move on to a different problem set. And so like, I'll give you one of my like two like really important discovery questions that help me disvalidate ideas. It's to ask, like, say you're talking to a buyer or a potential buyer, and you've shown them the thing that you're working on. They say, hey, that's awesome. I think this is super important to my business and I would like to use it. Many people say that kind of stuff because they want to give you positive feedback because you're a founder looking for help. Your next step should be to say, hey, thank you for all that positive feedback. Now, can you tell me what you'll solve in your business today before you solve the thing that we just talked about? And you immediately see them like relax, and suddenly they say, hey, like, you're right. Actually, I have this problem, this problem, this problem, and this problem, these 4 things to solve before I get to your thing, which is number 5. And it helps you realize, actually, they're going to solve your problem in 6 months from now. But problems 1, 2, 3, and 4 are totally in your wheelhouse, and you could solve those instead. And that's a great example of like spending the time to figure out, should I work on something else that's more urgent instead of the thing I'm presenting or the solution I'm thinking about today. And that's exactly what happened to us. We had customers tell us, hey, like, I do want to see all my customer comms in one dashboard, but I don't even know if my customer logs in. I don't have my customer data. I can't even see if they're using my product. And so we said, oh, wait, hold on a second. Why are we building customer communications? We can just build you a place to see if the customer's even logged in. And so, yeah, I think that's where like I just urge like everyone to think about, am I solving the most urgent thing for my customer? And I should ask them, what's more urgent
Right.
for you today? And they'll tell me happily.
Another sort of set of questions that I think that founders often have, and especially technical founders, is building product, demonstrating
Mm,
product, having customers use the product, and then some founders take a long time before they sell because selling is not part of the. They have never sold before. Selling is not great. You know, maybe if it's a good product, they should come, right? You have a different philosophy in this. Talk to us about building versus selling and how you sequence that.
two things. One is all founders should be selling. Many people are like, oh, yeah, my co founder does sales and I do tech. It just doesn't make sense. You don't know what to build unless you're on those sales calls. I think all founders should be selling and be on those calls and hear verbatim from the customer what they're thinking about. That's one. The second is you don't want to build the product that you're eventually going to pivot away from and then you're selling something else 6 months from now. So my perspective is sell first with as low fidelity as you can get away with. If you can sell via a PowerPoint slide, that's great. If you can sell via Figma mockups, that's fine. But
Right.
if you're telling yourself that you can only sell once you've built a production ready web app for like millions of rows of data, you're totally wrong. So like really ask yourself, like, what is the minimum thing I need to show the end buyer to convince them that this thing is real, and then sell them on that. And some early advice I was given was you bring the problem space to your early POCs, your early customers, and you ask them, hey, like, be a design partner. Help me figure out what to build here. I'll give you a massive discount. And we would literally tell our early customers, I don't care how much you pay. Because I know there's 10,000 other companies just like you that are going to buy this thing. Help me craft the perfect UI, the perfect infrastructure for you to use. Go away and like keep using it for cheap because I'm going to sell it to other people for much more. And like, like the thing we used to ask ourselves is like, do we want to make money on the first 10 customers or do you want to make money on the next like 90? And as long as you're
Right.
pretty sure your market's pretty big, you want to make money on the next 90. So let those first 10 customers be design partners. You're going to tell them, hey, look, I know we had those 4 conversations. It's not fully built yet, but I'm going to ship it for you on Monday and I'm going to iterate on it over time. So please give me some like leeway on that kind of stuff. And they'll
Right.
be happy too, because like your earlier customers are usually the smaller ones. Unless you're like a very enterprise focused business, then this advice probably doesn't apply. You probably need to build, but like you can still kind of defer building until a little bit later in the sales process.
Right. Something you said there is really key. You said that I don't need to make money on the first 10 customers. I don't need to make money certainly on the first customer. I'll give it to you. Help me build a great UI, but because I know there are thousands of customers behind you who would actually want it and pay for it. How do you know that? How do you know that part, which is like that there's a deep pipeline of customers who have the same
Yeah,
needs who would adopt it?
I think that's where the discovery comes in. Like the types of questions we would ask would help us figure out like how tractable is this problem, aka can we build something to solve it, and then
Mhm.
how many people in the world might face this problem. So, for example, like we would get patterns like actually every single B2B SaaS company that uses Salesforce should be using Hightouch at some point. Every B2B company that's using Marketo should be using Hightouch. Every B2C company that's using Facebook ads or Google, eventually as they mature, should eventually use Hightouch, which is tens of thousands of companies in the world. So, like different customers will tell us different use cases. And I've had founders tell me in the past, like, hey, like, what do you do when different customers all have different use cases? Well, you tell me, like, for each of those, is there a large N for how many people can use that use case? And if so,
Right.
then you have a pretty good tractable problem on your hands. And then just to be clear, what I mentioned there was actually just like a line that we use in these first initial discovery calls. Ultimately, these people end up paying us. They don't want to use a free
Right.
product. They want to get good customer support and they want to like do the right thing. So they do
Right.
ultimately end up paying us. But in the early days, we were like more interested in understanding can they pay us and would they pay us more so than like we need to charge you the maximum amount.
Right. That's right. And I guess selection of these customers is really important too. There are some types of customers who might have large wallets, but they are not the first adopters. They are not the first movers versus other customers who may not have the largest wallets, but they are willing to give you feedback. They're willing to spend time. I remember when I started ad products at Twitter, one of the things we did was
Mm.
we had this notion of two sets of customers. One were called the Everests, the Cokes and the General Motors of the world, who have the biggest budgets, but they don't adopt ad products early. And then we had the Rainiers, the Red Bulls, and the Virgin Americas of the world, who would adopt who wanted even just a PR value of an ad product is good enough, but they were willing to give us a lot of feedback. And whatever these Rainiers adopted today, the Everest would adopt 3 years from now. But that's where the money is. Did you do anything similar to that? Pick customers who are willing to move fast with you, or was on your wavelength and pace length?
100%. And for us, it was correlated with technology. So if you're an early adopter of the data warehouse, in this case, like the Snowflakes or the BigQueries of the world, then you're very likely to be an early adopter of Hightouch. And the reason us and all the investors had so much conviction in the early days is because there was a very large belief that eventually everyone would switch over to the Snowflakes and BigQueries as their data warehouse, and their marketing teams would become more data centric on these databases. So it's like everyone wishes to have like this kind of like timing, right? It's that right now in the market, there's a huge shift. Everyone's switching to Snowflake. That was true. And as they shift to Snowflake, they ought to switch to an architecture like Hightouch, where that data in Snowflake is being used for their sales and marketing. So it was that every person that becomes a Snowflake customer in 6 to 12 months should become a Hightouch customer. And you're right, like the GMs of the world would take a longer time to adopt Snowflake, but the retools of the world were adopting much earlier. So we didn't do it by like company size, we did it by tech, just to be very clear. And a piece that like you kind of allude to, which is really important, is diversity of customers. So some founders are looking for all of their customers to look the exact same as each other. Interestingly enough, like we actually looked for a diversity of customers solving the exact same problem. So let me clarify what that means. When we raised our Series A, we had less than a few hundred K of revenue. Why were investors so excited? It's because like the national weekly newspaper of Norway was using us, Retool was using us, a healthcare company in New York was using us, and a D2C brand. So very different businesses, different parts of the world, very different models, very different software type businesses. Not even all software businesses. They were using Hightouch for a very similar thing, which is I need marketing and sales data into my marketing and sales tool. And it's right now sitting in my database. So that's what gave us conviction that our tractable problem, database to SaaS, is applicable to a very wide array of customers. So even if the market crashes, we still have this large base of B2C customers that are not affected by the SaaS compression, that are still going to buy Hightouch.
Right.
Or let's say we saturate the US, we can go to Europe because those folks have the exact same problem. And that diversity in customer base gave folks, including ourselves, confidence that there's a large market here with the same problems that.
Right. That's right. You mentioned that a couple of things. I just want to connect. One is finding a big space, a big problem space, and perhaps intersection of that and a trend, the trend of everyone moving to Snowflake. Did that just take the time that it took you, a year or two, maybe just after the Series A, when you realized this is big, this idea is big, this space is big, this Hightouch could be big? Is that what clicked, or was it that the customers, or was it more about the diversity of customers you were able to aggregate? You realized that everyone wanted the same thing, which is what Hightouch was providing.
More the latter. So we had very strong conviction in like this trend and the space before our Series A. We would not have gone out to investors to raise a Series A if we didn't have conviction in the problem space and the trend. What we gained conviction in afterwards was our ability to win and the ability to see a more predictable sales cycle. And I'll just tell you very clearly what it was. February of 2021, it was a customer a day onboarding our tool without talking to us. And that's when we said, holy shit, this thing can work. Because we knew that someone was going to make it work, right? Like this is a big problem space. Someone is going to make this work. But that's when we said, fuck, like we can make this work. We're onboarding a person a day. They're not talking to us. They don't need our help. The product actually does the thing it's supposed to do. And people are asking us to build a gain side integration, a Pendo integration, all these different integrations that we don't have today. So, and a lot of that is because our principle back in 2020 was that this business has to be so interesting that folks find out about it on the internet and come to us to buy the tool. It should not only be so interesting that I can email people outbound and get them to buy. It should be interesting enough that people come inbound to us. And that's where we could talk about this for a whole hour, but positioning is something that I think early stage founders like really overlook, but helped us tremendously because we coined this term reverse ETL in like December, January, like January 2021. We were the first ones to start using that term. And because we coined that term reverse ETL, tons of data people looked over and said, holy shit, like reverse ETL, what's that? And then they'd read about it. Then they'd get intrigued. Then the next time their Salesforce admin said, hey, I need this field in Salesforce, they said, all right, I heard about this Hightouch thing. I think that will help me here. And they use the product online. So that flywheel of like position something in such a unique way that people grabs people attention. Now they're thinking about reverse ETL. In fact, hundreds or thousands of people were talking about reverse ETL who were not talking to Hightouch, but they were philosophically talking about what we were working on. And that was one of our success criteria for like a business we want to work on. It was really like, this has to be an inbound driven business in the beginning.
I mean, that building that brand up from nothing, coming up with essentially starting a new kind of category that everyone talked about, and then branding by association, building that category up, and then Hightouch is associated with that. How did you guys teach that? And it goes back to positioning. Positioning goes back to all the discovery calls you've had with all of these customers. How did you come up with that reverse ETL positioning? That seems such a killer marketing tactic.
So our customers came up with it. In fact, they were calling it, we were not sure about the term, but they kept calling us that and kept calling us things like reverse 5-trend, which is the forward ETL. And then they called us reverse ETL and they called us reverse Airbite. And we said, like, this is just sticking. People like this and they're coming up with it organically. Maybe we should embrace it. And like, I'll add a piece here, which is when you say like, what should we call it? Or like, how should we market this? The question you should ask yourself is for who? Because the way you talk about it might be very different for like one persona versus another. Which leads me to like my second product market fit question, like my second question during discovery. And this is usually the one that kind of blows founders' minds. You're talking to someone, they have your business problem, they need data in Salesforce, for example, and they're excited about using your thing. Now you ask them, who in your business cares about this more than you do, or would be more excited about this than even you are? And then they go like, you know what? Yeah, I can't fix this. Of course I want data in Salesforce, but I can't fix that. Talk to my data engineer. They'd be the ones that would be super pumped about not writing a Salesforce integration. They would love to use this thing. In fact, they'll know exactly what you're talking about. And all these marketers we talked to said, you know what? You should talk to my data team. Then we talked to sales ops. Sales ops said, you know what? You should talk to my data team. And all of those folks said, hey, my data person, I think, is going to get a better sense of what you're doing. And I think they're going to like it more. And it was from a very good fit in terms of like problem to a really good fit in terms of both problem and solution, where the data person said, yeah, not only do I think this makes sense, but I could use it next week, actually. I think I have some time to try it. And they would log in themselves. They would use it themselves. They were like setting it up autonomously. And so that was the difference where like, if we had not asked that question, we would have tried to sell this thing to marketers in 2020 and probably failed and told ourselves this had bad product market fit.
It's a terrific insight. Like when you have a customer, ask the customer who else is more excited about this, or for whom is this a bigger problem than you. What does it mean if they say, I'm like that said, no one else but me? It makes it easier, right? So you can buy, you're talking to the buyer and the user all at once, the decision maker all at once. Does it make it easier, or does it make it a more limited, smaller problem?
It definitely makes me skeptical. Like, no organization is so dead simple unless you're talking to tiny startups where you're so lucky as to meet the right person the first time and they're going to be the buyer and the user. So usually what I like to hear is, oh, well, the budget's going to come from here. Here's the person that I'd assigned to implement it. I need to get this person's approval. I want to hear that kind of like mapping in order to really believe the person who I'm talking to.
Right. As the marketing team or the customer facing teams, the sales ops teams and other teams pointed you back to the data team, um, did that also increase sort of sales time or cycle about how many people needed to sign off before the sale was made or before the integration was made or before Hightouch was adopted, because now you have another department that you have to convince. How did you sort of sometimes when founders think that oh, this is going to be enterprise sales, it's going to be long cycle, it's going to be multiple
Yeah,
stakeholders, it's going to take a long time.
yeah. So if you're talking about like we're post product market fit, we have to go to multiple buyers to sell the thing. Fully agree with you. But if you're talking about pre-product market fit, you're really just learning who to go to in the first place. So the incremental person you reach out to, you're not going to reach out to the marketer. You're going to reach out to the data person, and you're going to build your marketing strategy around the data person. So like particularly here, it just told us that we were digging in the wrong space, and we should be digging with data people. And then it greatly reduced our deal cycles. Those data people were able to like try the thing in weeks and buy the thing in under like, it was usually on average like 46 days back then. They would buy the thing, and they had the power and autonomy to do it. So it really reduced our sales cycles because we were digging in the right place on the get-go. Though I totally agree with you, like if you're learning that you have to convince multiple parties in a company before you can make a sale, that's a little bit of complexity that you're probably not ready to take on as an early stage founder.
Right. I guess as the process of discovery of talking to different sort of stakeholders, you're also beginning to navigate. You're doing two things. One, you're figuring out the right persona, and you're getting better at the next incremental sale because you're figuring you know how to get to the right persona faster.
Absolutely. Like you're learning their language, and now you can talk just like them when you talk to their peers or other companies. And for that matter, like I don't know if people utilize this often enough, but get referrals from your early customers or people that just like you. For example, you'll meet a data person at Uber. They're not going to be able to buy your product. They're way too big. But they probably have friends on data teams at other smaller companies that are ready to use your product. So as soon as you meet someone who generally likes you and can help you, founders should feel comfortable kind of asking for intros to peers.
Right. I remember you guys did that really well, all three of you, right from the early days, hungry for customer intros. I remember this one time when you had a leaderboard for all your investors. One person pitted against the other. Everyone can see how is this fund doing versus that fund versus the. That's always a cool idea. I think investors generally have a competitive zeal, and everybody wants to be on top. And you guys benefited them, hopefully.
Yeah, I think like the big thing is make an ask when you're really ready for it. And when you're ready for it, like do not rest until that ask is completed. Right? So I'm not asking, back then I was not asking, help me hire engineers. But as soon as we really felt product market fit and felt that the data person that lands on our landing page is likely to buy, we talked to every single person we knew, family members, everyone. Hey, introduce me to every single data person you know. And here's the target list of companies we're going after. We are ready to meet them. But we waited until we really felt ready.
Switching gears a little bit to sort of fundraising, you've done a terrific job of fundraising, and for the audience, for folks who may or may not know, the company is 100 people, doing more than 10 million in revenue, amazing Fortune 500 companies as customers, and amazing investors too. What was the fundraising process like? How did you you've raised quite a bit since the very early days, right? In very short period of time. Too. What was your sort of philosophy on fundraising? How did you think about who to raise from, how much to raise? And especially, I want to talk about negotiation. You're a master negotiator. Where did you learn that?
Yeah, I don't know. So let's see, I guess quick history is when we fundraised for travel, it was like orders of magnitude harder than fundraising for Hightouch. So the first like $1.6 million we raised, including the YC money, was insanely difficult. The first 600K took me probably like 6 months to raise. And conversely, the Series A, it was November 2020, and that took a few weeks, and it was $12 million. So it does get easier if like once you kind of find the right idea, of course. And at that point, we'd been around the block. We kind of knew every investor already, and they had evaluated a past business idea of ours. And we were kind of operating in a field where people were excited to invest, which was the data space. So there's a large number of differences that helped us during the Series A process. But how we think about it is really like a few things. Yeah, the best way I can put it is you fundraise at the time your business is most ready to fundraise. So a lot of people will say, oh, I can only raise a Series A when I have $1 million of ARR, or I can only raise a seed round after I have a product. And they're asking themselves the wrong questions. There's two things I like kind of encourage founders to think about. When do you have the most momentum? For some reason, maybe because of ChatGPT, you have the most momentum today. Pre-product, pre a lot of things. What the thing that's giving you momentum, listen to it and follow that demand and raise now. The other thing I ask founders is people will ask me, how do I set the valuation for my company? And they'll say, like usually companies that are worth $10 million have this much progress, but companies that are worth $50 million have this much progress. And I have a very simple view on the world, which is markets are efficient. The demand and supply intersect at a certain point, and that's the price, right? Like that's like very simple economics, but that's exactly how venture capital works. If you have a ton of people that want to invest in your company, the demand is high, and you price as per what that demand is. So the only way to figure out how much your company is worth is to kind of sample the market and ask a few investors, hey, like if we were to raise N million dollars, how much like could we get away with this valuation, right? So maybe like $4 million, you're thinking about a $20 million valuation, the typical 20% dilution. Just give that multiplier, right? Whatever the number of dollars raised is, multiplied by 5. That's 20% dilution, and then sample the market, see if they're willing and interested in that range, and that'll tell you if you've hit the right demand.
Right. Going back to momentum, so momentum is not just revenue traction. It could be momentum around the trend, around the space, around hiring, maybe around customer feedback. Could be any of those. But usually, when you have a good story to share, some positive news, something that makes it seem like the train is moving. This thing is going to leave without you. So investor better get on board if you want to.
That's exactly right. Yeah. My friend has this phrase, which is, and I can't share this anymore with the market crash. The phrase that used to be true back in like 2020, 2021 was that the valuation only goes up. And for early stage, that's still true. It's either going to go up or the company's going to die. Mm-hmm. And so investors have to make a fundamental decision. Do they think this company is going to raise their next round, or is this company going to die? Or more interestingly, do they think this company is going to eventually build an exitable company, or is it going to die? And so like that is exactly kind of how you like position momentum to early stage investors. What we did at our Series A, for example, is at the time we only had 4 paying customers, but we were talking to around 34 companies that were very serious about buying Hightouch, and we had not closed them yet. And our investors asked us, hey, like with such a low amount of revenue, how are you going to say that this is a business worth $75 million? And we said, well, we'll just close the revenue. We don't need your money right now. We'll raise later. It might take us like 4 or 5 months, but here's the 34 deals. Out of these, I think I'm going to close at least 24 of them. And here's how much revenue I'm going to have. So you can invest now, or give me 4 months. I'm going to go close these deals. I will introduce you to any of these 24 customers. You pick which ones you want to meet. I will close them in the next 4 months. Then I'll have N dollars of revenue. And then the company will actually be worth this amount. But every investor will be asking to fund us at that amount. So the question is, like, do you believe what you're seeing today? Do you think that these customers will convert and there's a market here? And if so, we can make this happen today, or we'll simply wait. And like a lot of folks will give founders that advice that if you're fundraising from a position of leverage where you can wait and you don't need to fundraise at that time, that's pretty critical. Otherwise, you're not going to be able to exert that leverage.
Right. Just want to come back to it. You had a few $100K in revenue back then for the Series A. Today, the company is doing north of $10 million in revenue. So all of that happened and more so at a faster pace than you anticipated. But at that time, at a few $100K in revenue, you raised that 75 million post. What? And that's what I want to come back to on the negotiation. That was a big ask at the time. How did you feel about dropping that number or coming to that number? And what was the reaction from the market that you heard?
Right. So yeah, there's something super interesting here, which is say you have a conversation and you ask the investor first, not what the valuation should be, but hey, how many dollars do you think I need to get this business to the next stage? And most investors are really inclined to get you to raise more money because they want to deploy more capital, right? So they say, yeah, I think you need like $10 million and that'll help you get to the next big fundraise. I think that's the safe amount. And your response is, well, I'd love to raise $10 million, but I can only take on 10% dilution. For X, Y, and Z reasons, I can't take on more than 10%. Or in this case, let's say it's 20% dilution, right? Then by default, your valuation is 50 mil. And it's really not about like, is this company worth 50 million? It's really, again, about, is it going to reach the next stage at which it'll be worth more than 50? And am I taking on a reasonable amount of dilution that makes sense for my founders and for my employees?
That's right.
And just like the one thing to remember is when you think about dilution, you're thinking about every single employee in your business. You're thinking about the whole options pool. And so like I think this is, again, something I learned from you in the early days, which is like an investor is doing their job and negotiating the valuation down, and a founder is doing their job and being a steward of that equity for everyone else in the company that is an employee by negotiating the valuation up. And there's a point at which like both people are kind of happy, and that's kind of the right point.
That's right. That's so true. Looking back, what makes you? I'm not saying that you're modest enough not to want to talk about yourself, but if you don't, that's fine. If you want to talk about the co-founders, like what makes you guys good at this? Good at what you're doing?
Oh, that's actually an easy one. The only reason businesses fail is because founders give up. It's not because they like failed to make the product or because they like couldn't raise money or couldn't hire the right people. It's because the founders gave up. And I don't mean that in a mean way. It's more just that any problem that comes your way is overcomable, or you'll pivot and you'll figure something else out. And eventually you'll figure out what to do. Like there's very few founders that have worked on like 6 memorable business ideas before getting to the one that works. And so I truly think like the thing that differentiates us, and in my opinion, most successful founders, so many founders went through pivots, is the factor of not giving up. And part of that comes from like who you are as a person, right? It's like, this was one of the reasons I truly believe immigrants are better at starting companies. Because their only alternative is to go back home.
Right.
So you're sure as hell going to make it work. Because you're not going to go back home empty-handed.
That's right.
And
very well said.
I don't have the perfect analogy for that with my life, but like I can say that I'm responsible for my parents' retirement. They spent like every last penny on sending me to college. And so I sure as hell need to make the thing work. Otherwise, they don't have a retirement.
That's right.
So it's not apples to apples, but it's similar.
Yeah, dude, I think your parents will be proud of. Actually, all 3 of your parents will be proud. Thank you for doing this. This has been terrific. And to everyone who's been watching, I learned a lot from this process, and I hope you did too, as you're going from your idea to turning that into a viable startup. And just know that there's no straight path. There are lots of ups and downs, and living a founder's life is not straightforward, especially as you're going from nothing to something. To that end, if we can help at A4 Capital, we manage 3 funds, over $300 million. We've been around 7 years, and we back companies like Hightouch, in fact 80 of them that have gone on to raise $2 billion. So please reach out to us. I'm Anamitra, Anamitra at A4.vc. Also follow me on Twitter, same handle, on my first name, and do check out our website, A4.vc. And if you have more questions for me or for Kashish, please shoot me a tweet. And if you'd like to see other founders on the show or other questions we should be asking, I'm really looking forward to your suggestions for future shows. Thank you so much all for joining. Thank you, Kashish, for doing this with me. I really appreciate it. Bye for now.